Hi guys, it's Jan 2023. It's a Friday, and today we're going to be discussing our trading ideas for this earnings season 2023. All right, so I'm going to present a few ideas for you, those that have already reported numbers and how we are trading them. Okay, I'm going to share a few things. Okay, so a few things that I think that you should be aware of. Notice that the S&P 500 has a hard time breaking above the 200-day moving average. And since we're actually near that 200-day moving average, here at about 3990 and 4000, even if it's trading at about 3930, sure, it can actually rally day after day and we can still chop. But we should note that the resistance is still very much in place, and we're still actually in a downtrend. So that means that any rallies, take it with a grain of salt, that the market's expectations would rather be to sell even on very good numbers. Now, for today, I'm actually gonna share to you a few of my ideas. Starbucks, I am actually planning to make a bearish put spread. You'll notice that all of our expiry dates today are March 17, 2023. That would be about 57 days from now. We're usually trading about 45 to 57 days. So because today is already Jan 20, your Feb 17 is probably just going to hit about less than 30 days. So we decided, we still have our Feb 17, 2023, but those are all in the money positions already. But this is in preparation mostly for upcoming numbers. So a few ideas that I do have is to buy a Starbucks bearish put spread here at about 110.90. Also looking to take credit spreads for Solar Edge, making a 310 bearish call there. For gold names, we do like that. So we have bullish call plays on Newmont Corporation and Freeport McMoran. That would be for gold and copper. For Dow Jones, we're looking to to sell credit spreads and receive a credit of about 1 to 125. So Dow Jones has immediately gone very weak, if you'll notice this month, this last few days, and it's actually showing weakness in a lot of your healthcare, banks, even the likes of your Apple, Microsoft, banks, especially Goldman Sachs, which reported a very nasty number this week. We did capitalize on that, and that's something that I will share to you as well. Number 6 is taking some credit spreads on NVIDIA. So NVIDIA hasn't reported numbers, and you'll notice that I am very much choosing companies that have no immediate earnings anytime within the next 2 weeks. So next 2 to 3 weeks, none of these companies are going to report yet. And the reason why I wanted to choose them is so that you don't have any surprises upon numbers. Okay, so NVIDIA, we're looking to make some selling of bear spreads and receiving credit of about 240 above. So for that's for the 180 strikes and 185. For solar ETF TAN, we're looking to make some bearish puts after seeing very nasty chart plays for high growth names like Enphase, Solar Edge. If you'll notice, for solar, Sunrun, so a lot of your solars have been getting killed so far. And we also want to actually make a directional bet to short some TAN or solar ETF here at about $80 strikes. For Visa and Macy's, okay, for Visa, it's just really very cheap today to actually make a short call near the overbought area. So looking to short some Visa at about 4 limits at 225 strike. Macy's reported actually nasty numbers similar to Lululemon. And yesterday, there was already news that Nordstrom was also falling in terms of expectation in their EPS. So the weak numbers in the department stores is something for us to actually capitalize upon, and we'd like to short it through Macy's bear put at 24. In the latter part, you'll notice that those are lithium miners, Lithium Americas, and Albemarle. Bullish on lithium names, in particular, a lot of Chinese lithium miners. Overall, we're actually bullish on a lot of lithium, nickel, and copper. So for lithium, we're looking to be bulls on LAC at 17.5 strike, and for Albemarle at 230 strike. So let me just show you a few things. For those who are unaware, basically in buy puts or in bearish put spread, what we're doing is basically we're combining two options. That would be buying a put at a higher strike and then selling a put to cover the lower strike. because we're assuming a directional bearish position for that. That's why we are buying puts, and then selling puts is to basically close that put at a lower level. So that's a combination spread. That's a vertical spread. Now in bear spreads, we're also willing to, for those who are high yields like Solar Edge, actually Enphase last night, we did actually make some bear spread. So today, if ever Solar Edge or Enphase does give some rallies, it's a good place to actually be selling credit spreads. So for bear spreads, we're selling calls on the upper strike, and then we're buying calls to just prevent in case it goes up and away. So sell call, buy call. So we're doing that for TAN. So for instance, for TAN, we're doing a bear put at 80 strike. So that means we're buying 80 puts and sell 75 puts, paying 2 limit max, which means that we risk 2 for a reward of 3. For NVIDIA, nice risk reward actually. So for NVIDIA, anything above $240 in the 180 strikes, I'll be taking that, even as high as $260 to $80. So that's your reward, and then your risk is actually lower at about $260 or $220 risk, since this is a $5 spread. So I'm looking to sell NVIDIA 180 calls and buy some 185 NVIDIA calls just to prevent the further upside. Last night, a lot of semiconductors started already a shower with the downturn. We actually saw the first bullish candle on SOXS, which is an inverse fund for semiconductors. I've also been seeing a lot of growth names starting to fall despite very good numbers. So we're actually seeing that the bears are actually starting to haunt the market, more specifically actually on Jan 18. So Jan 18, this huge candle downturn for Celsius, and then this Jan 19. The market actually got spooked, not simply on the earnings coming from Goldman Sachs, but because this is basically Celsius, they actually beat on their own numbers. But the market was selling off primarily on the Fed, reiterating that there's a lot of data on the Fed beige book that we will still continue to have about 5% interest rates, and that the narrative about whether the market is going to pivot, it's too soon. So the Fed isn't actually anytime going away from their tight interest rate policy. That's reporting about Feb 1. So the market is actually cautious ahead of all these numbers. And on Jan 18, we argue that the market has already started to really trigger a lot of bearish moves in many names, especially in your high growth names. So Celsius stock is actually showing that weakness here from about 110 falling straight below to 100. You're seeing tonight, actually, this is some things. I told you that we're bullish on FCX and NEM, Newman Corp, bullish on GDX miners. Tonight, you're going to actually see Sandstorm Gold. Although it's a very small company, the gold royalty space, I'd say that a positive earnings tonight will actually trigger stronger momentum for the gold miners. So how do we actually play that? We're bullish on Newman Corp, we're bullish on GDX, bullish on Barrick Gold, bullish on Franco-Nevada. So we're doing actually bullish calls on them, but in particular, we're mostly focused on Newman Corp. Okay, so also just wanted to share that there seems to be a lot of bullish movements in Grab Holdings. Now, the stock is actually hard to decipher because these are companies that have no earnings, no material earnings. So even at $12 billion market cap, it's very hard to say if it's cheap or not. So I think that what's going to be on the lookout on the earnings season for Grab is also I think it's a little bit bullish because of a lot of transportation fees. I mean, in the Philippines, a lot of people indeed have been reporting that ordinary folks are really feeling such a high inflation pass on the price surge on fares. So in the Philippines, actually, like from Makati to Quezon City, that's about 700 pesos. I'd say that a 15-minute ride in the Philippines using Grab taxis now or Grab car, it's about 200 peso. If you're traveling anywhere at about 40 minutes, let's say you're going from BGC somewhere to Manila, that would be about 40 minutes to an hour drive. You'd probably be charged something in the realm of 500 to 600 pesos, which is actually, I believe, around 50% increase. So there's really a tough time for consumers, and therefore, actually, LTFRB in the Philippines is actually targeting as a regulatory body on Grab. So Grab admitted a fare surge, but insists compliance with LTFRB. Regulators have been targeting the decision on Grab Philippines surge pricing. In an Inquirer news, it says that if you own at least 50% of the market share or at least 51, you're already considered dominant. And because of your dominance, you are probably overcharging and must be sought for investigation. So I think that the main problem on Grab is that every time that they're actually making money, the regulation and a lot of public clamor can actually fine them with government penalties, etc., which could range somewhere in the 100 millions of pesos. So I think that ride-hailing industry as a whole, as a business, is still beset with so much public clamor because it is still a utility. And the Philippines, the problem here is that we are unfortunately very bad in terms of mass transportation. So like our LRTs or MRTs aren't as sophisticated, say, versus in Hong Kong or Singapore or Japan. So we do have a difficulty in terms of mass transportation. And I think that in some ways, although Grab could actually be dominantly benefiting from this very poor infrastructure in terms of transportation of Philippines to help address that mass transport need. One thing that is also something to consider is that if you are thinking that Grab's price surcharge is actually going to result to a narrow loss in terms of this quarter's earnings, one of the ways that we're actually looking at is to buy some Grab for calls. It's trading at 360, so around March 17 or 57 days from now. So buying calls on 4 would be resulting to 40 cents, and then selling 5 calls, so that's about 30 cents. We can actually bid that for about 20 cents. So that's just going to be a $20 risk. And then you could probably make about 80 cents. So it's a risk 1, reward 4. We'll see. But I think that it seems like Grab is indeed the dominant market share in terms of mass transportation in the Philippines. And if you've seen all the public angst during Christmas season about the traffic and about the difficulty to really just get a cab, I'd say that I think anecdotally you would argue that it was so bad that it actually reached public investigation already. So if ever, I would be actually one of the surprised entities if Grab actually manages to say that. Of course, it's hard to really say because that's just an anecdote from the Philippines, because Grab is obviously a Southeast Asian play. They've got different businesses in other countries. So they've got, Singapore, Indonesia, Thailand. So we'll see the breakdown on earnings, but my assumption is that Grab actually might be bottoming out at about $3 and could actually potentially break out when their earnings actually break to the upside if they have narrower losses. Wanted to show to you guys also. So I've been sharing a lot on the tweets. Just wanted to share to you how powerful options are. So in this tweet, I don't know if you can read it. Wait up. Yeah. Let me just share this in a bigger format. Okay, so for those who are new here, you can follow me for free at Thesis Trader. I do share a lot of ideas and I tweet a lot of ideas when it's related to the US markets. So you can see that actually for the last 2 days, specifically Jan 18, a lot of our wins actually came from bear spreads. We stacked many financial shorts. And while we still remain bullish on Tesla, what we mean to say is we aren't stupid enough to not lock in partial profits, given that the markets want to pull back. Take note that next week, Jan 25, is going to be earnings reports on Tesla. I will briefly comment also on the Netflix reports, which actually just came out a few hours ago, which was after market close. Nonetheless, let's do this one by one, guys. So actually, a lot of people are a little bit cautious given that Tesla's going to be reporting next week, Jan 25. I do have to say that there's actually a higher low here at about 115. ever since the price cuts reflected some strong demand in sales in terms of China. So actually, there's more bullish fundamental news for Tesla rather than negative. Nonetheless, it's also very clear that there's a lot of resistances pent up from around 165 to about 140. So we do have to say that although we're bullish on Tesla, what we did actually was if we were too bullish or too high exposure, we were locking in partial gains. So let me show to you how that worked. So here, for those who are new, we advocate a lot of options because as you can see, your cost basis is very small. Like you can just have a risk of $1,300, in this case, $1,370, and generate actually as much as 200% returns, not just 67. Well, this was unrealized PNL as of last night. For this specific XLF bear spread, the width spread is 35 minus 32. That's $3. The moment that XLF or the financial ETF hits near 32 or lower, you actually get a profit of $3. So $3, and I bought this XLF bear spread, I believe, at about 40 cents, or was this 30 cents that I bought? My average cost here, I think I shared it there, but in this snapshot, hindi kita. But either way, I remember seeing the risk reward of the XLF bear spread, something in the range of 1:3, or if not 1:3, it was 1:5. So that means, yeah, because I purchased anything below, I believe I purchased this somewhere at about 47. I got in 46 cents, 35 cents. So I was munching in on a lot of XLF bear spreads because obviously it was also at resistance. And there was a day here at $36 when you already had the edge, and I would suggest that you always use your edge. It was very clear that Goldman Sachs actually declined. Jan 13, obviously, JP Morgan, Wells Fargo, Citigroup, a lot of your regional banks actually did well. A lot of your consumer banks did well. But investment banks like Morgan Stanley and Goldman Sachs really had taken a toll in terms of their declines in their trading fees. And then their net interest income, although it was substantial, was not enough to offset those declines in other businesses, specifically Goldman Sachs having to lose 69% in their profits owing to losses on Marcos. A lot of their foray on consumer banking didn't work out. So that was enough to actually send the shares of the financial ETF very much on the downtrend. So you can see that this huge move from about 36 to 34.8. Yes, this is just telling you that that is how effective using options rather than shorting the shares per se is more powerful. Notice that with just a 10% decline, if 36 hits 33, you can actually see this stock, this option XLF bear spreads actually go more than 100%, which will reach our target. We usually take profits above 100% for bearish put spreads. In this case, it's a debit spread. So XLF was actually a stacked up play. We've been doing, I've been shorting the banks after the release of Goldman Sachs, and then which was Tuesday. And then last Friday, obviously, there was already hesitation in the market. So it was a continuous play. We added a lot of XLF bear spreads. FAS is obviously a financial bear. So you'll notice that we advocate and we teach that when you have a correct thesis, you just really continue doing in the same sector. So this was actually a result of a lot of stacked up shorts in the financials. So XLF bear spreads, Bank of America bear spreads, Goldman Sachs bear spreads. And you'll notice the weak AUM of BlackRock. After the numbers, they said that a lot of people were actually exiting a lot of ESG funds. This is actually still very much still a good short if you're noticing, because it peaked here at about $767. So far, it's down to about $730, and it could still go as low as $680 to $700. Now, the beautiful thing about options is that you don't really have to short too much, or neither do you have to use a lot of money. So we've always explained that shorts using options or calls, whether you're bullish or you're bearish in options, you can do it with a very little outlay. So this was actually an exact example. Notice for Goldman Sachs bear spread, I had to pay just $12 or 1,200 since one contract is 100 shares. And definitely for this, I paid 12 and 360 minus 320 is 40. 40 minus 12, that's $28 of potential reward once GS goes 320. So if you think about it, 28 versus 12, that's about more than 200% reward. So in general, actually, all of these debit spreads are still expected to be correct. So we're still holding on to our shorts in the banks. We're still holding on to shorts on some mutual funds and big asset managers like BlackRock. And then still holding on some bullish positions on Tesla. If Tesla actually gives a downturn, say 110 to 115 or 120, still looking to buy more Tesla bull plays, either on March 17 expiry or April expiry, etc. So I'll be looking to add more Tesla bull spreads in a different expiry date soon, as these February expiries will obviously expire within just a month. These are also positions that we have. As I've noted, Jan 25 is going to be BHP's numbers, which is highly correlated to the electrification of future, since copper is the strongest conductor that is necessary for electric vehicles, 4 times more consumption in EVs versus in ICE. Same for EV infrastructure, for battery energy systems. So we're generally bullish on BHP. I've bought BHP bull spreads for that. That's actually available also in Australia. So you'll notice that I actually have 2 BHP contracts here. I've got 2 BHP contracts here. Yeah. And then for Tesla, more bullishness on Tesla. Recently, we've started also adding shorts in solar plays like Enphase. So obviously, last night you can clearly see here very big drops, about 10% on your solar plays. Enphase had a massive drop here. Solar Edge also had a massive drop for solar as well. So we're actually shorting these. We're shorting all of these companies, Solar Edge, for solar, and so it's actually natural why we are shorting TAN or TAN, which has a lot of these components in the solar ETF. So here it's very topish. A lot of high growth names are now pulling back, and we're actually taking advantage of that by shorting through options. Okay, so shorting Enphase. This is a sell credit spread, receiving about I think I did 2 contracts here. I got $3 and I'm still willing to take as more than $3 if I could per contract on Enphase bear spread. So here 260, 270 bear spreads, also 240, 250 bear spreads I did as well. So I'm receiving about $1,000 of credit. And I would be no problem if Enphase rallies tonight for me to add more bear spreads on Enphase. Nike started to short as well. Nike, you can see that Nike has been having a hard time after rallying, even after a beat here, as the market has already rallied it near 130. So on October area, it was about trading 80. Now it's trading about more than 50% up. And $130 is quite a high PE ratio already for Nike. And it's already topping in all of your indicators. So this is a technical call and a little bit on the fundamentals, because we argue that the difficulty on Macy's, JWN, is also, so this Macy's, it's very clear that it's a lower low and a lower high. So Macy's is in a downtrend. You've got Nordstrom in a difficult place. This is even worse. It's just a clear downtrend for JWN. So definitely your apparel, Lululemon obviously made a hint of a profit warning. So there's really that difficulty for a lot of these athleisure names. So we decided to short Nike because for obvious reason, the risk is small and the reward is larger. So here at about 130, we are shorting that by buying a put on Nike and then covering here at about 110. It would cost us about $6.50, $6 to $6.50 to do that. And so that's just cheap. Like to do that, it's just going to cost you $600 to $650 per contract. So I mean, if you were to short 90 here and shorted 100 shares here at 129, that would mean that your stop would be 135, right? That would cost you already 600. Whereas we have a Nike bear put at 130, and well, our stop loss is basically $6. So even if Nike hits 150 or 180 or whatever price, even if it hits a million, we'd only lose $600. So that's the reason why I like bear spreads. By buying a put here at 130 and selling a put at 110, we actually will have a max loss of $6, $6.50. So if we are able to hit that six, then max loss six, max reward would be 20 minus six, which is 14. So 600 risk, 1400 gain, not bad. So that's how I evaluate always on the options. We don't need to do Black-Scholes valuation theorem here. It's all just arithmetic, plus minus times divide. It's all about just what's your risk, what's your reward, and what's the percentage in your portfolio. That's about it. So Nike bear spreads doing that. SPY bear spreads, also capturing some spreads there. Started to also short Estee Lauder. Estee Lauder, which is also a very huge recession-proof company. I started to short Estee Lauder after seeing consumer staples actually break down. Let me show you a few weak names. P&G was actually breaking down prior to the earnings, and then earnings actually also disappoints. That's actually an implicating also that all the other consumer staples are going to have a hard time. So Unilever is actually potentially a good short. Also potentially good short would be Colgate Palmolive here. Okay, so Colgate Palmolive is actually already bleeding. Estee Lauder is already trading at about 47 times PE multiple. So these are actually already trading near the highs. You'll notice that a lot of these consumer staples have started to give up on some of their gains. So Coca-Cola was actually breaking down. Pepsi was breaking down. So you can clearly see that the market is showing us difficult times ahead. And a lot of your consumer staples are starting to unwind and mostly going to cash. So it's a sign to us that the outperformers for 2023 continues to be miners and a lot of your commodities. Notice the different charts. We're still bullish on Devon Energy. We're bullish on energy stocks. Still uptrend for the companies like Devon or Occidental Petroleum. Your Hess Corp and Chevron reports next week. Very bullish charts on a lot of your energy names. Hess Corporation looking to be hitting all-time highs. You've got BHP looking to hit, well, in Australia, it's already trading at $50, which is trading at all-time highs here. So that's $49.95 uptrend for BHP. In Australia, in New York, so we're bullish on BHP, either Australia or New York, same thing. Bullish on Rio Tinto, also have some Rio bull spreads. Yeah, so bullish on actually all these miners. You can clearly see the bull case on your Newmont Corp. Let me just show it to you. Very strong uptrend. A break of this 55 will solidify another rally towards 60, which could happen actually given that your gold prices obviously are trading above 1900, whereas it used to trade about 1600 here. So that's about roughly 20% on the upside for the year since November, since the reopening. We do note that Hang Seng Index obviously is very strong at 22,000. However, we started becoming bearish on China here at about 22,000. At 22,000, you've already rallied 53% off the lows. Sure, it can go as high as 70% up off the lows, all the way to 24, 25K. But looks like actually for a month's worth of, or 30 to 45 days worth of holding, looks like Hang Seng Index is quite in the near-term top, which means that selling credit spreads is quite advantageous. So we've actually been taking profits, and we shorted and took profit very quickly because EHang here fell from 16 to 11. Last night I did cover my EHang shorts, but I wouldn't hesitate to short EHang yet again if it tries to rally 15, 16 yet again and take credit spreads. Pintuotuo is actually a name that could rally tonight, but no problem. I've been starting to make some credit spread sells, taking credits for Pintuotuo. Here at about 100 and 105, we've been selling calls, selling 100 calls, and then buying 105 calls. I receive about 140 bucks in my Pintuotuo. So 140 bucks, if I could get more than that, I would be no problem. So 100, 120, 140 bucks, no problem to get more credits from Pintuotuo. Bearish divergences on your Pintuotuo after rallying almost 300% from the lows. Depends. Well, actually, if you were really, really lucky, you got in at about 20s here, 20s to 100, that's 5x. But assuming you entered somewhere here about 40, it's still a very huge run up already for Pintuotuo, and it's already trading at about 120 billion yuan. So it's quite pricey, given a lot of e-commerce names are actually getting some hard times. So the look on e-commerce isn't necessarily in the brightest of spots. Ocado and downtrends reported quite nasty numbers here. Not bullish actually on the e-commerce names. Think that most of them are still at the loss. So Shopify, as it rallies near 45, we note that here there was a buy signal at about 35, but as it rallies near 45, it could be another potential sell. So growth stock seems to be actually more in a range play with the upside capped here. Yeah, because even Tesla, we think there might be some capped upside initially at about 140s to 160s. Before it actually proceeds to 200. It all depends how good the numbers are. Okay, let's briefly also explain to you what just happened on Netflix numbers. So Netflix is actually up after hours. It's trading at about 330s, 340s. A few things to note though on Netflix, it did beat in terms of the subscriber additions, but in terms of earnings, and they're actually down. So I would assume that Netflix trading already at 40 times multiple is actually gonna be quite expensive to keep on sustaining itself on the uptrend. So even if Netflix actually breaks out, we noticed that sometimes, like what happened with Nike here, after great numbers, it would rally, say, a month, and then actually start to actually also falter. So possibly for Netflix, if it does rally towards 360 and 370, we would be looking to actually make a suitable short for Netflix. So the near-term top of Netflix is somewhere here about 360 to 370. So even if it gaps up tonight, I think that it might actually be short-lived. We'll see. But it's going to be a cheap way to make a put option near an overbought territory, even for a tech name. Okay. So overall, I think the best ideas still are to short some staples. So we're looking to actually enter some shorts. So we already saw that PNG had a bad decline. So there's actually leeway for us to add shorts on PNG. Any rally near 145 would be treated as a good entry for shorts, with a 150 put, and then perhaps a downside pattern towards 135 or 130s. So PNG bear puts would be initiated if we get a rally. We would take some shorts on McCormick. Also a very strong downtrend here. Can see Kimberly-Clark showing a sell-off here. Sell-offs here. You've got the staples in general in a sell-off pattern. Mondelez, Kraft Heinz, Conagra Brand. So very strong dead pattern for Mondelez, a very bearish pattern. Your Kellogg's, Conagra Brands. So it's been in a sell-off. It also means that in the Philippine context, your Universal Rubina here at about 150 is in a topish area. So here at about 145 to 150, it's quite topish. Although in the Philippines, it may not necessarily follow the US markets. Nonetheless, we do see that there is some hesitancy in terms of consumer staples today. And I think it has to do with the fact that margins may continue to decrease and there might be less ability to raise prices in the 2023. Let me also show to you what's happening in the commodities. So for the year actually, or for the month, you still actually have very strong moves when it comes to commodities. Propane, naphtha, gasoline up about 15 to 25%. Your crude oil is trading at $80. Brent crude is trading at 86. So we could argue that ExxonMobil, a lot of your shale-related companies, Chevron, Hess Corp, Devon, Occidental, all of your XLE names are actually in an uptrend, guys. So we're actually still on the uptrend bulls for XLE, and we're actually also bullish on the miners. So materials, basic materials. We can see a huge upside potential here. So any dips on materials, say at 77, 75 here for XLB, would be an entry point for this year. So we think that it actually might hit 30% up for XLB materials, given all of your miners are actually on the uptrend. Look at copper, CopX, in a very strong uptrend here. In it's actually near 50% from the lows, trading at about 28 here, and it's now trading near 41, 42 for your copper. Of course, your gold miners are actually doing pretty fine this year. Since November breakout here, since the start of the reopening, it's been just in a pretty decent uptrend from 25, now trading at 32. And even for this year, once it broke that 30 area or 29, it just went up 10% further. So it's really telling you that the miners, whether it be gold, silver, we are seeing a lot of attention towards precious metals, very strong uptrends there. So we're actually bullish on the likes of Pan American Silver in terms of silver plays, the largest silver in the world. So Pan American Silver already trading at 200-day. We think it consolidates and pulls back, but the consolidations will be bought. So even at 17 and 18, we're actually buying PAS or American Silver. Yeah, so pretty much a diversified select mix in 2023, wherein you've got some ideas on the long side and ideas on the short side. Technology is gonna be a little bit hard. We've seen actually Microsoft and Amazon lay off a lot of tech employees, tech workers. So Microsoft is still actually in a very strong downtrend, and it's now trading at a lower high. A lot of things to actually do for a Microsoft. Any rallies near 240 to 260s might actually be on a bearish put play. So mostly on the short side here. Hi for those who are listening. All right. Yeah, I'm actually just pretty much explaining our place. So we've basically been quite adding a lot of bears in terms of financial shorts, staple shorts, a lot of uneventful earnings coming on the staples. So we would say that a lot of the ideas today are just reacting on the numbers. And you can see it's very clear. 200-day moving average is in a very resistance heavy spot. And how the markets were actually breaking down the past few days, especially on Jan 18, is a warning actually for most Americans that inflation is quite sticky. And if you read through the PNG numbers, it's quite tough. This is a tough environment. Most of the earnings guidance is going to be having quite a difficulty in trying to raise prices, even if, of course, they want to raise. So some bright spots, though, is that I'm not sure if the market truly believes that streaming services like Netflix reported actually that they'll hit $3 to $4 billion of operating cash flows, free cash flows for a year. That actually surprised the market because they thought that Netflix is going to lose money. We'll see if the markets will really push Netflix higher. After hours, it's up 6%. We can see Netflix still rally to 350 or 360. However, we won't be chasing Netflix. Instead, the implications is that Netflix would trade at a huge premium versus the likes of your Paramount, Warner Brothers Discovery, Disney Plus, your Comcast, CNBC. There's quite a lot of attention in the industry of streaming. I do agree that, of course, your entertainment of the world is a lot of these companies. Nonetheless, it's going to be, I believe, quite tough for every company to continue spending. You're seeing that Netflix spent roughly $19 billion in terms of content costs. $19 billion is no small sum, obviously, which Disney or the likes of Paramount Global or Warner Brothers. I don't think they can just easily cough up that much of content costs. So I generally think that the numbers of Netflix, they tried to hide the fact that their earnings per share was actually declining. Instead, they tried to paint a picture that they have strong subscriber additions. They've got a new CEO. Reed Hastings is stepping down from the CEO role. Reed Hastings is now going to be executive chairman. He's passing it on to Ted Sarandos and Greg Peters. I would say that actually for the earnings, we didn't have very great numbers. The movement of Netflix is partially because there was a lot of IV crush, implied volatility crush. Usually that happens, guys, during earnings season. So we actually warn for those who are new in the US markets not to touch any company that you know will report numbers, not unless you are willing to suffer massive drawdowns in case it goes against you. Or if you don't want drawdowns, basically use defined risk plays. We always advocate, for instance, if you're gonna head on to make a bullish call spread on Grab, thinking that the price surges in the Philippines could have affected their earnings to be materially lower losses for this quarter, for just 20 cents, you can actually make a buy call, or yeah, you can actually buy some Grab for calls, which is an OTM call, in case you think Grab actually surprises on the upside. Or you can actually make some bearish puts on Starbucks. The reason why we're looking to make some bearish puts on Starbucks is because there's a lot of labor union that they cannot actually afford not to pay as penalties. So there's of course a lot of attention with a lot of companies trading today also near resistance. So part of the attention why I've been shorting the likes of Estee Lauder is it's because it's trading at 48 times multiple. We mentioned actually that a lot of your consumer staples were trading at 30, 35 times multiple, way above your PE averages in the index at about 17, 18 times, with a growth rate of just less than 5% in terms of revenues. So I don't think that the markets today in general at 4,000 SPY for one SPY is actually conducive for a very strong, healthy bull run, especially if your interest rates are actually giving you 5% in the Fed. Well, the Fed is giving 5, but definitely the consumers are getting something in the realm of 3.8 to 4%. Not so bad still, since the banks are earning that net interest margin. The thing about the banks though is that we have been seeing higher credit provision losses. A lot of mortgages are having a hard time to pay up. We've actually have wage growth is actually having a hard time too. It's been still spiking up. So wage growth has still been spiking up. So that means that a lot of companies will still suffer in terms of how do you pass on all of that wage growth of your labor employees who don't want to work without a raise. How do you pass it on when inflation is also still too high? That was actually in the beige book of the Fed. So a lot of the consumers are still not healthy. We also argue to you that despite China's very strong bullish run, if you take a look at all the scenarios of China New Year, we actually argue there's actually this Chinese New Year curse. You can check it for the last few years. It's been happening. Market has always stopped either a week before or a week after Chinese New Year. So index right now in Hang Seng's 22,000. A lot of your companies in China are trading near resistance, save for the fact, let's say you're talking about Chinese miners, that's a different story since we're bullish on Chinese miners. So when we're talking about lithium, copper, or nickel, we don't really mind. Lithium, copper, nickel, gold, molybdenum, steel, iron ore, we're quite bullish on all of those. Uranium, yeah, we're bullish on oil, energy, but definitely we see 2023 as a selective year, and we've been picking our spots. And we'd advocate that options is going to be a great tool in 2023. If you want to learn more in options, definitely check our channel, check our tweets, check our website, www.awesome10x.com. You can ask us, how do you create bearish spreads? How do you make a $1,000 earn $1,000 to $2,000? And that's highly possible in options. Now, obviously, you might ask, what's the risk of a loss? We do take a 50% stop loss on that. So, or if we can actually take a less than 50% stop loss, why not? But that's a hard stop at 50%. So let's say you make a bearish put on Nike. As I said, we plan to make a Nike bear put at 130 strike, and then cover it at 110. That would be about 600 risk and then 1400 reward. That's not bad. And in a 600 risk exposure, what does that mean? It means that your account doesn't have to have $5,000 even. Your account just needs $600 to initiate that bearish put spread on Nike. And then if you're right, then your 600 can hit 1.4. So that's a 200% gain on your $600. Now, if you're wrong, your 600, we take a loss at $300. So still quite a great risk reward. And we do have a lot of testimonials in case you're wondering, are we talking our books? Is the system working? Yep. I did actually share last night. Yeah, I did share quite a lot. Yeah, this was actually a trade that we've done, which is Berkshire Hathaway and JPM bear spreads. Don't be too agitated with the numbers, because you obviously should be aware that we don't really teach people to put $25,000 or $16,000, in this case $40,000 worth of options, not unless the account in this case is, well, $1 million. Usually, if it's a $100,000 account, we would say $4,000 exposure, which is 4%. If it's a $10,000 exposure, about, maximum risk would be 10%, which is $1,000. Of course, you could argue that your account could be 10,000, but you have like 90,000 in the bank. So it really depends how you really trade, because you have to be honest with yourself. So this one was a $40,000 exposure, but this was made in a $1 million account. So yeah, so this is an example telling you that bear spreads, obviously, with just a 3% drop in Berkshire Hathaway, how many plays can you make where a 3% drop can actually make you 120%, right? So that's a Berkshire bear spread that we did, and we made for the accounts for members of Awesome10X. We actually said that. We also shorted financials, as we said, which were JPM bear spreads. So same thing. Actually, this 40,000, once Berkshire hits 300, this would hit still at about, could potentially hit 300% return. And then for this one, average price of $2. If you'll notice, we entered at a very low price, and this is a potential move of 500%. So actually, theoretically, if Berkshire hits below 300 and if JP Morgan hits below 120, the $40,000 here could potentially earn about $160,000 or hit 200K. Now, of course, you will. We're not saying that you should do like huge bets in your account, not unless your account's really $1 million. But so, example, if your account is $100,000, we would advise you to make something like 4K, hit 10K, 20K. It might sound surprising for you, but it's a reality. These are real positions. So we've been sharing how consistent the systems are with the defined risk spreads. So here in EHang bear spread, for instance, as I said, we did short sell 15 calls with a cover at 20 bear calls. Well, the maximum reward here would only be 100%, but usually here, when we're doing credit spreads, we always take profit 50% above. So this was already taken profits. That's why I said for EHang, when it hit from 16 to 11, we already covered, right? Look, the high was about 17. It fell as low as 11 here. So we covered somewhere about $12 last night. So that huge move was actually a $5 move that actually spelled a 50%, 60% return already within just 2 days. So definitely covered that very quickly. Yeah, so Hmm. Yeah, this is actually an actual testimonial. 15% up year to date using options, just primarily using options. And the beautiful thing about options, guys, is that you don't need to use your buying power. Notice that in this account that went from 17K to 20K, total cash is 16K, meaning the person is just using $4,000. Technically, not really 4,000 because unrealized value is obviously 1.5. So that means $2,500 of risk exposure. And you can see that very clearly because if you add all the percentage net liquidation, this is like 14%, 15%. So like 14 plus 5, that's like 20%, 20%. So yeah, so it's just really about $4,000 worth of exposure. And then obviously closed the EHang bear spread ASAP last night. Then these bullish plays obviously on the Tesla. We did actually make several bullish calls on Tesla, especially on the Jan 6. So we made our Tesla play both ways for the Tesla bull shares of 1.5x ETF, which is 1.5x long. So here, actually, that was that day, $5.30. And then obviously it hit 7 here. Still bull. So we're still bullish on TSLL, aka Tesla 1.5x. Think it's going to hit 8, 9, 10. Still bullish, and any dips near 6 or below 5, below 6 would be a good entry for us to add, say 560. Same here for Tesla. So we're still bullish, and we're gonna be holding our Tesla positions until earnings time, which is Jan 25. So yeah, that's actually some examples, and you can see that's a very defined risk. Bull calls here. This was a risk of just, I think this was made at $9 to $10. This was made at about $1.30, so this was $130. And two contracts, you can see position, two contracts, so just the risk of $260. So that's really how beautiful options are once you carefully understand it. This was actually an awesome 10x testimonial by a member. Morning, Nikki. Just sharing to you, I finished December earning 2,000 just by selling credit spreads. This even includes all the cut losses. So obviously we're not going to be perfect here. But actually our hit ratios on the bear spreads, on the bull spreads, all of the spreads, we make about 75% on debits and about 90% hit ratio on the credit spreads. So really, really high payoffs when it comes to credit spreads. So he started this account in December with a cash of about 3.3. Now he's ending his account with 5.4. So he's up already to 1. Very good moves. He also copied our Baidu bear spread and then EHang. So yeah, we did Baidu bear spreads. Right now, Baidu might actually be quite volatile, guys, because China obviously is still trying to patch up. There's a question here. Are you bullish on Netflix? I saw the numbers on Netflix. It didn't really quite impress me. We didn't play, and it is a very huge rule on our book not to trade any earnings before the numbers come out. So we only trade it after. But seeing even after the numbers of Netflix came out, I think that what the market will do is they'll push it up, obviously, from a lot of bears that are covering their shorts. Nonetheless, there's actually a chance that Netflix might topple at about 370s. They've been preaching to the choir that their ad tiers will be very much positive to their free cash flows over time. And they're planning to raise prices. They highlighted that they have 230 million subscribers worldwide, but their earnings fell because obviously they have to spend a lot on content costs and marketing costs. And a lot of these new subscribers are not paying the full sum. They're actually paying the basic ad tier of about $6.99 per month, which is a far cry from how much Netflix used to get for about $12.99 or about $15 for a US customer. So I'd say that personally, Netflix trading at 370s or 350s. I'd be leaning more to make some bearish spreads when I see it top out. Not impressed really with the Netflix numbers, but I would expect Netflix going up tonight to actually trigger probably some streaming related names to be afraid, because Netflix is showing that it's quite dominant in the field, has enough money to actually spend on content. But in terms of earnings, it's not some great number to be excited about. Well, you can read the numbers yourself or listen to the earnings call yourself. Market is quite happy, but I think they focus too much on the subscriber additions, but not really the quality of those subscribers paying. So yun. Yeah, so for Chinese names like Baidu, we're looking at a topish area here at about 140 to 150. I have been adding some bear spreads on Baidu. I do expect Baidu today to go up, seeing that Hong Kong Baidu was up last a while ago. Nonetheless, it's near-term top. So for credit spreads on Baidu, we have been looking to short some, sell some credit spreads. Yeah. So yun, yeah. So those are just a few examples of yeah. Recently, you'll notice that most of our accounts have been piling in on a lot of bear spreads. So especially the last 2 days. So yeah, no, Berkshire bear spreads, very strong bear moves on Berkshire. Berkshire obviously owns your Apple and a lot of banks. So quite bearish on these names. So we shorted about 315 areas for Berkshire Hathaway recently, the last few days. So yun, I'm hoping that you guys are learning and using options in your tool set. I really have to say that if you don't know, we try to make a beginner course here in Awesome10X for free. Try to check out the video, Awesome10X, explain options like I'm 5. It's really effective, really strong, consistent performance on options, very defined risk, quite similar to stocks, except that it involves lower outlay. So yun lang guys. See you and then have a good Friday. Trade well. Don't forecast earnings. It does not pay. It's better to actually react. So what we did with banks was react after the numbers came out. For Netflix, actually, my reaction there isn't really that great. So I won't chase the Netflix numbers. What I'll do is just wait for it to top out and short it afterwards. I think the good reaction place if you want to short anything on earnings is for a short it would be the Macy's. Nordstrom is too low, so I wouldn't bother. But yeah, there's actually a lot of implication with the fact that the banks and Macy's department stores having a hard time, or Lululemon having a hard time meeting profits. So the fact that Netflix didn't actually hit a good profit is already telling you that earnings this year for S&P 500 isn't going to be great. So it's going to be mixed, guys. You don't need to really react. I mean, you will have to react after the earnings release. So that's really how to play the game in earnings season. Yun lang. Have a good day and see you again next week. Hope your trading is doing well. Bye-bye. I'm bullish on Tesla, not on Netflix. Tesla and BHP. I'm going to be holding a lot of Tesla before the numbers come out next week. Bye-bye.